in Austin, Texas, and I'm here today with Matt Scalese with One Real Mortgage. What's up, Matt?
Not much, Liberty. It is Friday. For most people, that's the beginning of their weekend. For us, that's the true beginning of our work week.
That's true. Do you have anything special going on this weekend? Any
No, I'm
pre-approval letters
actually.
to generate?
I got a couple pre-approval letters and application work. I'm actually co-hosting an open house tomorrow.
Oh, that's
Yep.
wonderful. Spring is a fabulous time for open houses. So if you have a home that's on the market out there, I definitely suggest to get an open house going because there's a lot of people out and about if
There
it's not.
is, and we're actually going to be doing a food truck.
Oh my gosh, what kind of food are you gonna have in your food truck?
It's going to be tacos. So
That
we
is
we
so
found a local company
cool.
that's really, really popular and everything. So that way it gives people time to hang out, really enjoy the property, understand the property and everything. So it should be a good time and the weather's supposed to be beautiful.
Because unless you really eat a taco in that home, I mean, do you even know if you're gonna like living there or not?
Exactly. You got to be able to be comfortable.
I know. Whenever I'm touring a home that I'm thinking about for myself, I always have to get in the bathtub and I'm like, is this where I want to sit? And they're like, what are you doing? I'm like, I gotta make sure this is gonna be good.
Exactly.
Well,
That's going to be your oasis.
all right. Today we are all about our veteran home
Yes.
buyers. We are going to be talking about the ins and the outs of purchasing a home with a VA home loan.
Yeah, I definitely want to start off by, thanking, any veterans that see this. Thank you for your service. I love working with veterans. I come from a large Army family. So that's why I want to make sure we had an opportunity to dedicate, one of our podcasts to truly educate our veterans on what their options are with the VA home loan program.
Yes, thank you so much for your service. I've had the pleasure of working with a handful of veteran buyers here in the Austin area, and it's a great group.
It is. It
It
really
is.
is.
And anything that we can do for any buyer, but for a veteran who has really put their life on the line for our whole
Literally.
entire country, we need to love on those people. So
Yep.
thank you so much for the opportunity. And I mean, it's not like when you get into the service, they break this stuff down for you. So we're here to answer all the questions that you might have with what it is to become a VA home buyer. So how do you become eligible,
So,
Matt?
and to be eligible for a VA loan, you have to either be a current service member, a retired or honorably discharged service member, or a surviving spouse of a veteran who unfortunately passed away from a service related injury.
And any other family members to veterans?
Nope, they are specifically designed just for those three forms of eligibility.
Okay. Okay. And there's different types of veterans. Am I right? There's like 100% disabled veteran
Correct.
and how do the veterans find out what they are, what their
So
status
typically,
is?
at time of discharge, they're going to receive their DD 214. That's their actual certified discharge letter. And from there, it's actually going to let them know how long they were active service for, what the retiring rank was and everything. And then also are able to obtain what's called a certificate of eligibility. So that's actually going to indicate what their disability rating is, can go anywhere from 10 to 100%.
Okay.
And with veterans, there are extra benefits that we'll get into a little bit later in regards to, when somebody is receiving a disability rating or disability benefits through the VA.
Great. So they're going to come to you and know what their status is, basically.
Yeah, in 99% of the time, a veteran's going to know if they're receiving disability benefits because they are going to be able to apply through that, through the actual Veterans Administration. And if they receive a rating, they're essentially getting compensated for that because it's putting a hurdle for them to jump through to continue their life normally once they become a normal citizen, non-service, non-active service member.
Okay. So as a realtor, when I'm having this home buyer consultation with home buyers right up front, when they come to me and they're like, I want to buy a home, one of the questions that I ask are, have you served in the military and what is your veteran, status so that we can kind of point you in the right direction when getting financing.
Yeah, and it's huge because there's so many benefits to VA loans compared to FHA and conventional. It's a conversation that should be had every single time. I have the conversation with every single buyer that I have because it's such a huge perk that they are so extremely deserving of having this opportunity to utilize the VA home loan program that I personally, I know you as well, don't want any veteran to miss out on.
Exactly. So if you're a veteran, you're going to encourage them to use that VA financing
Every
opposed to
single
buying
time.
a home with cash. What if they have the cash?
I mean, even if they have the cash, I mean, when you look at it in the big picture, and this is where I always like to break things down to simplicity. Yes, you may be able to buy that $500,000 home in cash, but what if something happens?
Mm.
You could
Mhm.
finance half of it. You could finance three-quarters of the purchase price. You could finance all 100% of it. For me personally, I would always rather have money in the bank to fall back on because what's going to help out more if you run into unforeseen circumstances, a,
Mhm.
a house with no mortgage or $500,000 in the bank.
Well, let's get into it because I'm excited to know what all of these perks are, since it sounds like a really good program. So, starting off, the first thing going through the application process, the restrictions on credit score are a little bit more relaxed. Isn't that right, Matt?
Yeah, so keeping it simple, you typically can go down to a 580 credit score on a VA loan. Lenders do have what are called overlays or risk factors that they put in place. You typically do want to be a 620 or higher to make sure that the process of purchasing the home, the underwriting is going to go as smooth as possible.
Okay. So you want to at least say 620, but it can go all the way down to 580.
Correct.
All right. And then you said 0% down. So
Yes.
0% down payment for a
Correct. 0% down payment. So 99% of the time, I always want to leave that 1% chance that a buyer typically does not have to put a down payment. So you can finance 100% of the purchase price. And that's one of the biggest benefits compared to FHA and conventional loans that do require some form of down payment.
if you put 100%, if you finance 100% of that, will you have mortgage insurance?
Absolutely not. That is another awesome perk about the
What?
VA loan. There is no mortgage insurance regardless of the down payment.
That is a huge,
Yes,
huge benefit because FHA loans, they're a wonderful product and they really help first time home buyers get into those homes. But one drawback is that it does have mortgage insurance with that type of financing that will stay on that loan until you refinance into a different product, right?
correct. So there's certain instances where you can get away from mortgage insurance on FHA loans sooner, but for 98% of people, they're going to be paying the mortgage insurance until they refinance into a conventional loan.
And mortgage insurance can be substantial. What are you telling people to expect when they do have mortgage insurance?
I mean, I can actually calculate it for them. So the FHA calculation is actually really easy. It's 0.55% of the loan amount divided by 12. So if you know me, I'm always a fan of simplicity.
Let's
Let's say
play a game
somebody
of
is
that.
paying buying, a house, the loan amount is going to be $400,000. The mortgage insurance on that alone, they're probably going to be looking at $185 a month on an FHA loan.
I mean, that's, a
That's
gym membership or, you know,
That's gas, that's food for a week. Well, hopefully food for a week in this economy and
I
with
know
inflation and everything.
that's true.
But it does add up and it's a nice, easy way to make it easier for our veterans to qualify by not having that extra expense as part of the mortgage payment.
Yes. Because then you have to think about, other things that go into your monthly payment, like property taxes, home insurance. Are there some things here that veterans need to keep in mind?
Yeah, so one other thing about kind of comparing the FHA and conventional real quick is VA loans also have lower interest rates. So that's the third biggest perk of the VA loan. To make it easier for veterans to qualify, they do typically get access to lower rates compared to conventional loans.
Like how much lower are we talking about?
On average, you're probably looking at half a point lower.
Okay. And
Yeah,
and when you're looking at, what's the payment difference between, a 7.5 and a 7%?
I mean, depending on the loan amount, I mean, it could be anywhere from one, two, three, $400 a month, depending on how much that specific buyer is looking to spend. I mean, which again, is substantial, especially adding it
Yes,
to
that's
no mortgage
hundreds of
insurance.
dollars. I mean, right
Yep,
there between the mortgage insurance and the lower interest rate, we're talking about, anywhere between 400, $600. I
yep,
mean, depending on what loan amount you have.
yep.
So let's talk about the loan amount. Do veterans can they use their VA home loan to purchase homes over $1 million?
Yes. So there are what are called VA county loan limits. It typically goes up to about 766,000, but the VA does offer a jumbo home loan.
So
Yep,
so it's a jumbo loan. So
correct.
okay, so it's a different product than the regular VA
Yep.
home loan.
But still, same requirements. You can do no down payment. There's still no mortgage insurance. You're still getting lower rates on a VA jumbo loan compared to a conventional loan.
All
So
right.
all of those same perks and benefits are still in place for the veteran buyer. It's just a little bit of a different loan program because it's exceeding the county loan limit.
And also there's just an FYI, when you are purchasing a home with a VA home loan, you have to have a specific appraisal done that they have extra certifications for VA home appraisals. So it's different from just a regular appraisal.
Yep.
Sometimes that might make it just a little bit tough to locate those people. So maybe bake in another week of closing just in case.
See, we're still on a VA loan. We're still right around 25 days to close.
Really?
Yep.
That's so odd. So you already have your special appraisal people in line, I guess.
Yeah, so like we're gonna get that appraisal order as soon as we get the buyer submitted to underwriting because VA loans are a little bit different, not only in regards to the type of appraisal that's done, but the timeline that the actual appraiser has to get the appraisal completed and back to the
Mm,
lender.
and what about homes? I mean, I know with FHA loans, the home also has to be qualifying. There can't be any like rotting unpainted wood in the
Yep.
exterior. There has to be handrails installed. Are there other type of home qualifying things that the home has to have for VA loans?
So it's pretty much on par with an FHA loan. So if it's a condo, it does have to be on the VA approved condo list. Like you said, it has to have the handrails, no painting or peeling, chipped or peeling paint, no broken windows, no missing shingles, because they want to make sure because the Veterans Administration is actually backing the loan and guaranteeing a portion of it in case of default. They want to make sure that the veteran that is getting into that home is going to be in a safe and secure place with that property.
That's great. So what other cool things do you tell your veterans that come to you when they're starting their loan application?
I mean, one of the things I always tell them is, making sure, let's look at the DD 214, let's find out, what your discharge is, because there is something called a dishonorable discharge. And if you were dishonorably discharged from the armed services, you are not eligible for a VA loan. Because it's typically there's something that happened, during your service time, that had you dishonorably discharged. So I do always make sure to ask what the discharge type is to make sure we're setting them up for the best experience possible.
That's good. Just to put those expectations right up front.
Exactly, because we want to make sure, like, they have a good experience. So we take away all those negative connotations about purchasing a home and what the process is like. We want to be as smooth of a process as possible, so when they walk into the new home, they can relax about everything.
And that's what you want to do when you get your new home.
Yep,
You don't want to worry about anything else.
exactly.
And also, I will add too that if you're a 100% disabled veteran, you are exempt from paying your property taxes. That, however, is outside of if it's in a PID or a public utility district. So, I mean, you really have to do your due diligence to make sure what taxes are there. Because sometimes when you're purchasing a home, like in a new community, they lump all those taxes in one little line. So you're like, oh, I wouldn't be paying that. But just double check, triple check to make sure what you are going to be responsible for paying for your property taxes, and utility taxes and stuff like that. But
Oh,
just
for sure.
another fun thing that veterans can be exempt from paying.
Yeah, and it varies from from county to county, state to state across the
Mhm.
country. You know, there are states that will allow the buyer to actually apply for the exemption during processing. A lot of states don't let you apply for that until actually you've actually purchased the home and you do legally own it.
Yeah, so that then you could, yeah, so then you could be responsible for like a small portion of taxes
Yep.
before you're actually in the home. Yes, and I speak specifically about Texas, Central Texas too. So if I say something, if you're in California, we'll have to get a local real estate professional there to give us their expert advice on how to
Exactly.
navigate that.
But yeah, I
Well,
always like to throw out that caveat, just so we step our buyers with as much education understanding as possible.
so I had a veteran buyer who wanted to put a down payment down because they wanted to get their monthly payments lowered and they had savings that they wanted to put into the home, kind of like a forced savings in the home. Um, can you put a down payment on a home even if or are they forcing you to put 0% down?
No, you can put it down as little or as much as you want. And
Okay,
that's the
that's
nice
good.
thing with the VA loan because there's a lot of flexibility for the veteran and the buyer to make sure that ultimately that they're going to be in the position that they want to be in with a new home.
That's so awesome.
Yeah.
Now, what about you used a VA loan to purchase your home? You've been living there happily for 10 years, and now you're ready to sell your home and you still have a mortgage amount. Is the VA loan assumable? Can they get
Yep.
another? Let's talk about that after they've lived in the home.
Yeah. So VA loans are assumable through the current servicer of the mortgage. And there's a couple caveats I always like to throw out with this so the veteran fully understands. So anybody, whether you're a veteran or not, can actually assume a VA loan, which a lot of people don't realize.
I had no
Yep.
idea.
Yep, they cannot restrict any certain type of person from actually being eligible to assume a VA loan. But the thing for the potential seller and the veteran to always keep in mind is your eligibility in the future is not restored until that home is paid off.
Oh,
Yes.
wow. So you couldn't then, can you only have one veteran loan per your homestead residence?
So it all depends on what the original purchase price is.
Okay, so
So
it's about
you
price.
can have potentially up to two VA loans simultaneously. And they give that opportunity to veterans because a lot of active service members do purchase a home while their base is specific or while they're stationed at a specific base. And they also get their transfer orders. So they want to give the veteran an opportunity, if they choose to potentially purchase a new home at their new base. So there are what is called bonus entitlements to where depending on what the original loan amount was, that the veteran may have the opportunity to purchase a second home, even again with a potential zero down payment option. But that's when I come in, I actually do some research, run some numbers, see what their bonus eligibility is, if it's available, and if it dictates a down payment or not.
Because that could be a wonderful way to acquire rental properties
Yes.
around the country,
Yep.
wherever the because also if you think about it, you know, typically I think that people kind of move in and out of these base towns
Yep.
that are by the base. And so there's a need for
Right.
rental homes
Yep.
there. So that could potentially be a really great way to build your wealth through acquiring properties and also be able to have you retire at some point and have that passive income of a rental property.
Exactly.
That sounds fabulous.
Yeah.
But I would be weary about maybe having that VA loan assumed by someone else just to really make sure that you do your due diligence and have all the right things in place. Because what if that person that assumes that VA loan defaults on their loan? Would that
Exactly.
negatively affect the person, the original person who took that loan out?
It would. So it would fall back on the veteran's entitlements because the home would be defaulted on. And because the VA loan was assumed, the VA is still actually going to guarantee a portion of that original mortgage.
Okay. I'd be a little bit weary about that.
Yes.
I am a very trusting person, but at the same time, you've got to protect your assets and this wonderful gift too that you can use in acquiring different properties.
Yeah.
Well, so let's talk about. So we talked about whether or not you can put down 0% down payment or more, depending on what you want. We talked about regular and then jumbo loans. So really, I mean, these VA loans just seem like you could do so much with them.
There is, and even when it comes to the opportunity to refinance,
What
if it's the VA has one of my favorite refinance programs. It's called an EARL, or an interest rate reduction refinance loan. For simplicity in the industry, we call this streamline refinance. And the VA designed this program to make it easier for veterans to lower their rate, lower their payment without having to go through all the hoops and hurdles that you go through when you purchase a home. So to be eligible for the VA Streamline, you have to be in the home and made at least 6 months of payments, and they have to be on time. It has to be at least 214 days from closing, and your rate has to be
from the other
reduced.
way after closing?
Yep,
214 days
214 days
after
from
closing.
closing. Yep.
So
And
less
then,
than a year.
yeah, it's literally, I mean, it's just over, your first payment is going to be 30 days after you close on the home. So you're already 30 days, in. And then once you make your next 6 payments, you're going to be right around that 214-day mark. And then as long as your rate can be reduced by at least a 0.5%, you're eligible for the VA Streamline. And it's such a smooth process. There's no future appraisal. There's no future
Mm.
income verification. The only thing that has to be done is your credit is pulled, and we have to make sure your last 6 months of payments have been on time. If that, along with getting a 0.5% reduction on the interest rate, are possible, the veteran is going to be eligible for the streamline refinance, and it takes about 10 to 14 days to close.
That sounds fabulous because
Yes,
that means that any veteran that's kind of sitting on the sidelines and they're like, okay, like I don't want to buy a home right now in this interest rate environment, they aren't going to be stuck in that home and that interest rate forever if rates
exactly,
do. But at the same time, they could go ahead, purchase a home. That way they're gaining the equity, they're in the home, but they know that at any point when rates do come down, 0.5%, they can refinance with this
exactly.
easy way. That's
And
sounds like a
and you
wonderful
can
way.
do the streamline every six, or actually it would be, every 7 months if it financially makes sense for that veteran.
That is crazy. So you
Yep.
can just keep doing it.
You can keep doing the streamline as long as it makes sense. We meet the requirements of the on-time payments, the interest rate reduction. The veteran can do the streamline as many times as they want.
That's I need to like go and call my veteran buyers right now. Make sure they know that because it was scary. I mean, it's scary because rates just kind of we didn't know what they were going to do,
Yeah.
and so we hope that they're coming down, right, Matthew? Let's end on talking about where we think rates are going to be in the future.
So they have gone up a little bit. We saw the gross domestic product come in yesterday, lower than was expected for the first quarter of 2024. But on the flip side of it, the PCE, which is the Fed's preferred measure of inflation, came in right where we were expecting it to. So
What
it's
does PCE stand for?
I don't know.
Okay, I don't.
I I'm all about acronyms, but that one I always know it, and it's because I'm on the spot. It's right on the tip of my
It's okay.
tongue.
Okay, I don't. We won't hold you to that one, Matthew. So
I'm
the
actually gonna
PCE
find it
came
up.
in.
I Personal consumption expenditures.
Okay, personal consumption expenditures. So
Yep,
that's something that they take a reading on through the whole United States
every single month.
every single month.
Yep,
And is it people buying products, cars,
it's
houses?
everything. So
Okay.
I mean, it's food, it's airline tickets, it's rent, it's gas, it's mortgages. I mean, any kind of expenditure that we utilities, all energy factors, all of that is taken into account across at different points across the country. It's averaged out and lumped together to see, where inflation is going and where prices are going.
Do they want that consumption high or low? Do
They
they want
want that percentage to be as low as possible.
Okay,
So
so
the
they
lower it comes in, the lower the rate of inflation.
okay.
Yeah, so it came in right where they were expecting, which is good, because it's going to show the Federal Reserve next week at their meeting that what they're doing is starting to again positively impact the rate of inflation.
So it came out, it was where they thought it was going
Yep.
to be. And so I mean, what are rates today and what do we think they might be doing next month?
So on a conventional loan right now, we're probably sitting right around about a 7.5, a 7.6. VA loan, we're going to be right around a 7%. Within the next, I would probably say spring to summer of next year, we should easily be back into the low to mid sixes at the highest. Because we know the rate cuts are coming from the Federal Reserve. What they want to do is they want to make sure that we are truly getting inflation at a point where it's going to get back to that 2% monthly or yearly goal that they have
Mhm.
before they start cutting rates, because they don't want to cut the rates too early and see inflation start spiking again.
And I know there's a lot of factors that go into each and every person's rate and what they get qualified for. But if we could just simplify it down to like a $400,000 loan amount with monthly payments at 7.5% interest rate versus 6.5, what do you think ballpark that monthly payments difference would be?
Oh, I can tell you in about 35
All
seconds.
right, I'm timing you. The go.
So
Find
we
out.
said 400,000 for the purchase price, right?
400,000 for the loan amount.
For the
I'm
loan.
thinking loan amount because I mean the average home here in Austin is the numbers just came out. It's under, 445. So I'm thinking if the loan amount's around 400 to make things super simple, work off
Okay.
nice whole numbers.
So for a veteran right now in the current market at a 7% principal and interest, the payment would come in about 27.15 a month.
2715, 15 or
15.
50?
Yep.
50.
2715.
2715.
Yep. And
Okay.
then even to give somebody an idea, and this is just for simplicity, let's say, you buy a house right now, which is 7%, next summer, let's say rates are at a 6.25. Again, this is just for, simplicity of understanding for our buyers.
Six and a
You,
quarter, enough to come down for
yep,
sure. Enough to
you
have
could
that.
potentially look at your payment dropping by over $200 a month.
I mean, I think that's worth a refinance,
Yeah,
especially if it's going to
absolutely.
be no appraisal fee. I mean, I'm sure there might be some fees associated with it.
Title's going to have to be redone, things like that, because we still have to make sure everybody's secure, with the exchange of title and everything.
Mhm.
But those fees can be rolled into the loan, if the buyer has equity.
Okay.
And the one thing I always tell people to keep in mind when refinancing is the 36-month rule. If you can recoup whatever the closing costs are in 36 months or less, it will financially make sense to refinance.
36 months. And you'll
Yep.
be able to crunch those numbers and let me
Yep.
know if that's going to happen.
Absolutely.
Well, wonderful, Matthew. I have had such a wonderful time going through this. I learned so much. I hope you guys did too. There's a lot that goes in and out of these different loan products. So if you have any specific questions for you, Matt is available. You can find his contact information in the description of this video. It's been so great meeting with you, Matt. Thank you for taking the time to really break this down and simplify it for us. That's what we need.
That's what I'm here for. I can't wait and look forward to our next video and webinar and podcast in a couple weeks.
That's right. Well, enjoy your weekend. You get those buyers approved and have fun at your open house. Maybe I'll stop by for some tacos.
Sounds good. I will see you soon.